Good morning, traders. This is Frank Jolly with MF Global coming to you from the Chicago Board of Trade on October 12th with early calls into grains. Now, in the overnight session, grains were mixed, but we had a report come out at 7:30 this morning Central Time. A lot of grains are closed. So the calls are expected to be lower across the board. Corn 5 to 15 lower, soybeans 5 to 10, and wheat 5 to 10. Lower across the board. Now, I don't want to waste too much time on the outside markets or what happened yesterday, but real quick, Treasury down, dollar down, safe havens are down, equities are up, energies are up a bit. Yesterday, we had a wild day in the grain markets. It's very, very unusual. If it's ever happened before, I don't recall, but that we had a limit move in the corn the day before a report, and especially with these new expanded 40-cent limits. Corn closes around 6:45 yesterday, up limit at 40 cents higher. Now, it was sort of the perfect storm of events yesterday. Rumors of China buying corn, talk about Russia adding tariffs to their exports, and the idea that today's report would have corn yields lower. All this news amounted to a bullish short covering rally yesterday. I say short covering because funds were big buyers, and open interest still went down. So it's telling me that the shorts were getting out, and it wasn't anything more than that. The market was overdone. We do have corn yields unchanged at 148.1 bushels. Production lowered just slightly. We're getting 12,433,000. It's down about 64 million bushels from the average expectation. Carryover came in better than expected, 194 million bushels in the corn. That's up 60 million bushels from what the expectation was. So, based on what happened yesterday and today's report, I wouldn't expect too much out of today. There's no real bullish news here to keep the momentum moving higher. The market had a big rally yesterday. The market is not always rational. It doesn't always do what you think it should do. However, today calls right now are lower, and that's because we put a little too much premium into it yesterday. Bean yields, production, and carryover all a little bit lower, but not enough to support it. Beans will go lower also. They put a lot of premium back into the price on the same concepts of, China buying, looking for, worse news out of the USDA today than what we got. Wheat still remains a follower, but wheat is up also in carryover. So these numbers are not bullish enough to feed this bull market, to keep the momentum moving higher. Again, as I've been saying, that at this time of year, we're still at historically high prices. We do have harvest pressure on corn and soybeans. We need to see better demand. There is room. If China wants more, they can come and get it. We have plenty right now, and there is plenty of time down the road to ration demand. It doesn't need to happen just yet. The report's out of the way. We had a big wild day yesterday. Don't expect too much today. It should be to the downside, though. That's all I have time for now. Please feel free. Give me a call or shoot me an email. Keep your comments coming. I appreciate it. My number is 866-231-7811. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.